All right. So here we are. Just let me know if you can hear me. I've got Rudy here. I think some of you wanted to see him. He's probably not going to stay the whole time here. He likes going under the desk. Of course, we're waiting for Rafi and Clive. They're going to be on. Let me know if you can hear me properly. Type 1. Oh, great. There you go. There's Rudy. Some of you wanted to see him. There you go, Rudy. Say hello. He's been a very good boy. There you go. For those of you who are watching this recorded, if you don't want to listen to me talk to the viewers, go 10 minutes forward. That's when Rafi and Clive will be on. Silver Drill Pickle from Texas. Jane DR says he's gorgeous. Yeah, he's a good boy. I mean, it's been a hot day here for the UK. It's the first hot day. It was around 30 degrees Celsius, which is 86. It's cooler now, but I've got the window open. And yeah, we've gone out a couple of times. RJ McShane is in maximum security prison. Are you with, what's his name? Julian Assange at Belmarsh. Sam Lamcott says, Lemnot says, hi, Marion Rudy. Manic Miner. Yeah, Rudy, Rafi and Clive are coming on in about 10 minutes. Pablo Pina. Rick Enfed from Nebraska. Gordon D. from Ottawa. Anton Spoji from Slovakia. Rudy at the controls, yeah. That's right. Andrew in Basingstoke can hear me loud and clear. That's good. Andrew Brown. Greetings from the Scottish borders. Okay. Rudy, you want just a few more minutes and then you can go down and do whatever you want. Okay. You want to get down? All right. There you go. Yeah, he's going under the desk. He likes lying under the desk, don't you? Okay. All right. Andrew Arama from Quebec. Hi, Andrew Arama. Shane from East Texas. Falsino Rasha III from Rhode Island. A lot of people of Portuguese descent in Rhode Island. I assume you are one of those with your name. Silver Forever. Yeah, that's the does Rudy have his silver in a trust? Wow, he's dug it really in a very safe place. Someone told me about an episode of Dad's Army. Those of you who are in the UK know about Dad's Army, and it's about Fraser, the Undertaker, when they find out that he has loads of gold sovereigns, and they try to get him to put it in the bank. So he pretends he's going to go hide it in the church graveyard, and he actually puts a brick in it. And yeah, and then Mr. Mannering, who's the banker, and he's the head of the Dad's Army, says, you should put it in my bank. It's going to be safer. And he said, I don't trust bankers, and I don't trust you. So that was funny. Dad's Army. Melissa from Texas. Melissa Bush. Big Dog, North Carolina. Rudy's puppy training is going well. We're level 2 now, and Tuesday, we're going to go for the third. It's 6 weeks each level. I'm not sure we'll go. We might do level 3 eventually. No, he's doing really well, and he enjoys it. When the crack up boom, well, I think we're getting close. And aside from all the debt and the inflation, I think we're seeing a lot of other symptoms. But I mean, you cannot like get away from all the political division, all the social, all that's going on socially is pretty much crazy. It's like things are really upside down in the world, and I don't have to tell you, about that. So yeah, the cracker boom will start. It happens really quickly. When it will start, I don't know. I think it's got a lot to do with food prices, because people are going to get concerned. They're going to start buying more. And then I've never really, I guess in Brazil, we had inflation, but I guess I was in my teens and early 20s. I didn't quite understand things, but yeah, it doesn't take too long. Yeah, I know my Scots act. I'm not really good at doing a Scottish accent. uh, that's not my forte. Sam Lamnot, perhaps you have some idea of this. The other day, I heard a few places that Germany is already into a recession. Any clue? Or is it? They are in a recession probably because the Germans prior to 2020, they're running budget surpluses. So the government was very frugal in Germany, and their GDP was positive at the time, and it was less than in the US or the UK, mainly because the government doesn't spend that much. But I wouldn't be surprised if Germany is in a recession. The only reason why the US or the UK are not, I mean, the UK is really in a recession. Our GDP is like zero, and that's an official number. And it probably would have been negative if they hadn't tinkered with it. But we in the UK and the US have huge current budget deficits. And I haven't looked at the German deficits, and they did go up a lot, even though they had surplus prior to 2020 because of what happened 2020 to 2022. But I would say they're cutting back now, and that's why they're in a recession. But and also the what's happening with energy there, energy prices, the fact that Germany is very dependent on imported energy, that also doesn't help. Shannon Wright, good morning, Mario. Hope your family are doing well. Yeah, no, everything's fine. I guess you're somewhere in the Far East or Australia or New Zealand, Shannon, because it's not morning here, but I guess it's morning where you are. So yeah, the title for it today of the live stream, we're going to cover it a little bit. Chinese physical silver demand could break Comex and LBMA. And there's a guy on Twitter, a Chinese guy who's covering this a lot. And I'm trying to get him on, but he's not too comfortable speaking in English, even though he writes in English. But he's an interesting guy. So I've got some information from him, and we're going to talk to, of course, Rafi and Clive as well. Rafi does cover Comex silver quite a bit more than I do. T. Kirkland from Tasmania says, like your show. Oh, thank you. I've never been to Tasmania. Wouldn't mind going there. It looks beautiful. I think there's a YouTube channel, Tassie Boys, or something like that, and they go around. Well, it's one guy now. He goes around penny for gold in the Tasmanian forests. It looks beautiful over there. Unfortunately, he can't keep the gold. It has to go to King Charles, which I found outrageous. But anyway, Clive is here. Rafi will be probably coming soon. Hi, Clive.
Hello, Mario. Can you hear me?
Yeah. I'm already talking to the viewers. We're waiting for Rafi, and yeah, and Rudy made an appearance. Can you come back here, Rudy? Maybe Clive will see it as well. Here he is.
Oh, how sweet! Oh, he's gorgeous.
He's just had his first cut about a week ago, because you're not supposed to cut his hair until he's 6 months. So there you go.
I've got the window open behind me because it's a very warm evening here in Switzerland.
Me too.
I'm just hoping the mosquitoes don't come in.
It's been 30 degrees here today, which for here is pretty hot. Matthew asks me, how long have I been doing my YouTube videos? Well, I started really in earnest 2016. I think I started making a few videos in late 2015. So yeah, it's been about how many years? 7 years, 7.5 years. How come I just had an advert during his live? Well, adverts do pop up because I monetize my videos. Kenner Hotby has a question here, Clive. What's safe if the system, out of the system's ratio, physical versus miners, seem like nationalization will be an issue? Don't quite understand what you're asking there. I guess he's asking what's safer, physical, metal, or miners. I would say physical. What do you think, Clive?
I think one should own both. Hedge your bets. Don't have all your eggs in one basket. Certainly, if gold and silver goes up a lot, the mining shares should rise faster than the gold and silver price. And I don't think nationalization is a huge risk, but it is clearly a risk in some countries. For example, if you have silver miners in Mexico, the risk is greater for nationalization than silver miners, say, in North America.
Yeah, I've heard about Mexico, and I saw Newmont the other day. They are having problems with their silver mine there because there's strikes, so they shut it down. And I think, unfortunately, the world is being divided into the West, the North versus the global South. And commodities are going to be very important in that world. So yeah, you have to, diversify. James Hafford, I have watched SD Bullions about this Chinese silver market, and he actually mentioned Bai Xiao Jing is his name. And I communicate with this Chinese fellow on Twitter, and I was telling them earlier, Clive, that I asked him to come on, and he's not too comfortable. His Chinese is not great, but he sent me some information, and he talks about how silver consumption in China is very strong, especially industrial. And they built like 300,000 electric cars in just the first 3 months of the year.
Yeah, I mean, I'm not much of an expert on silver in China, but I can say I've read that the demand is going up due to photovoltaic demand, i.e. solar panels, and secondly, it's going up due to the automotive industry. And there was an article the other day saying Elon Musk was in Shanghai, I think, and lo and behold, a huge quantity of silver disappeared from the Shanghai Stock Exchange or from the Shanghai Exchange, and there were rumors that maybe Elon Musk had bought it for his batteries or something like that.
Oh yeah, that's what I saw. I think SD Bullion did a video about that as well, and I'm going to share it here with you and the viewers. This is the guy that Bai Zhao Shun. So he calls himself Oriental Ghost on Twitter. And he's written this. He writes stuff. He says, the international silver market needs reform. And I think what he's trying to say is that we could have what happened in nickel last year happen in silver. So it says the silver products of the Shanghai Futures Exchange were launched on May 10th, 2012. So you're just going through the contracts. Says physical delivery must be a member of SFE who can provide and accept value-added tax invoices. So you can't just be there as a speculator, it looks like. And he says the pricing power of silver has been long in the hands of Comex and LBMA, and it was not until 8 years ago, after the launch of silver products in previous period, that the situation began to loosen. So, and he talks about that here. The rapid development of new energy has driven rapid development of electric vehicles. In 2022, total sales of EVs in the world is 10.10 million. It is 6.8 million in Chinese mainland. So I think you could be right there about Elon Musk, and why wouldn't he like tell people he's doing it? Well, because I think silver is so important, and if he did, he'd create a massive spike in the silver price.
I did read a statistic saying that the demand for silver in electric vehicles is set to keep rising, and there was some phenomenal statistic, something like 80% of the world's silver production will be consumed by the auto industry in 40 years' time.
Yeah, and the other thing as well about silver, and Bai also talks about it, and I think it's the U.S. Geological Survey. There's very little, reserves of silver underground left. And the other thing he wrote, and I'll tell you guys, is that the scrap, when people say, oh, but you can always get scrap silver, but it's so cheap that it's not worth for people to recycle it. That's what he's saying. The price needs to be a lot higher to make it worthwhile, and it could run out. But I don't know why he put this here. It says the development of high-speed railways in China is particularly impressive. Figure below shows ranking of the countries of high-speed rail. I guess they they have some silver that they use in the rail network. But one thing I found amazing is that the US only has 735 kilometers of high-speed rail, while China has 40,400. I mean,
do you have any high-speed rail in England, Mario?
Doesn't look like it. No, zero.
No, because they're all on strike.
Yeah. Well, and the excuse here is always that the UK was the first one to build the railroads, and that it's difficult to change. But I think they have this HS2 that they're trying to do, but it's going to cost so much, and the UK is in deep trouble financially that I'm not sure we'll ever have it. But it's a small country. I think it would be more practical to have more airports and flights, don't you think?
Well, London's got 3 airports already. I don't know. Are they thinking of building a 4th one?
I don't know. I'm just saying maybe, fly to Edinburgh instead of taking the train. But
Yeah, that would be good. I can tell you, getting to Edinburgh is a tough one from here in Switzerland anyway.
Yeah. Ben says, I don't know what's happened to Rafi. He's running late. Have you considered how the elites' war on growth and depopulation will affect overall demand of things in the medium term? I mean, yeah, if people are, if there is a plan for depopulation and it could it could affect demand, but the thing is, well, it could affect production. I think what you're trying to get at is that there will be no inflation because a lot of people will be dying, but I'm not too sure. What do you think, Clive?
Well, let's hope that we don't have a lot of people dying. Of course, there's always been dangers,
Yeah.
but if assuming we don't die, there will be a lot of inflation, and I think the inflation is going to hit those things which are in short supply, which will be, as it always has been, works of art, property, paintings. I don't know, perhaps some people look at paintings on my wall, they're not valuable at all. But if you have a valuable painting like a Mona Lisa, for sure, it's not going to be going down in value. And of course, gold and silver would benefit from that too.
Yeah. Someone is saying, who's buying all these electric vehicles? I mean, who can afford it? Well, it looks like the Chinese are buying a lot. Maybe Clive can talk a little bit about that because you have a connection to China. I'm sure they have a huge middle class now and upper middle class, so they can afford it.
I can tell you that everybody in China who can afford it is buying a car, and those who can't afford it are buying them too. I recollect actually, it's a few years ago before COVID when I was in China, and we were standing by the side of the road looking for a bus or something like that, and it didn't take more than a few seconds for some guy to pull up in a BMW. It wasn't an electric vehicle this time, but it was a very expensive vehicle, and said, "Do you want to ride?" Obviously, he was going to charge us for the ride. That was his business. And I got talking with him. Apparently, he was leasing the car, basically it was consuming a lot of his income. But everybody's buying cars in China. And my wife's uncle, he's Chinese. He just bought his first car. Couldn't drive it. Don't know how he passed his driving test, but he parked it, and we had to I had to get in the car and unpark it for him because he couldn't get it out of the parking space. And so there's a lot of people who are driving cars in China who wouldn't pass their test here in Switzerland.
Do you think, because in Brazil, I don't know how it is now, but I remember some people in Brazil used to buy their driving license. Maybe that's what's going on in China.
I don't want to say it definitely yes, but the suspicion is extremely high.
Yeah. Clive, Matthew is asking, at what age did you get interested in financial markets?
Well, I've been I'm going to say 14. When I was 14, I went to the hospital with my mother, where my grandfather was in bed, having some treatment, and he showed me a little exercise book he'd got in which he'd written down various shares that he owned, maybe BP and ICI and Courtaulds and things like that. And against every day he had a new page, and on that page he'd have the number of shares he owned, the share price, multiply the number of shares by the share price to arrive at a value. Then he'd add up the column to get to the total value. And I found this absolutely fascinating, that not only was the price of every share changing every day, but the total at the bottom of the page was changing every day. It was kind of like a spreadsheet before we had any computers. And so he had this exercise book with one page a day with a different value every day. Absolutely fascinating. And from that day on, I wanted to get into the stock market. And I actually bought my first share around my 18th birthday, and learned one of the most valuable lessons you can learn, which is never listen to a tip, because ultimately that share went to zero.
Yeah, I mean, yeah, if you find something that's really good, why would you want to tell the whole world as a tip? I agree with you. Yeah,
I'll tell you the name of the company. I can't find out what happened to it because the internet didn't exist then. It was called Eglinton Oil. And according to the broker who gave you the tip, they'd found the world's largest oil field. And that would have been 1975.
Okay. I have an interesting story about Chinese markets. When I came to work in London in 1992, my dad had for some reason, well, he had an account with Chase Bank, and Chase Bank had like a brokerage arm that was actually NatWest Markets or something like that. Weird. And my dad gave me, allowed me to use that account, the brokerage account, and I put a little bit of money in there. And I looked into the Chinese, B shares in Shenzhen. And that was in the early 90s because I thought, oh, China is a good place to be. And I bought the shares of a company called China Bicycles because I said, well, the Chinese are going to get wealthier and they're going to buy a lot more bicycles because, we always thought in the West, oh, they like bicycles. But I was way off because they're driving, like you said, Teslas and BMWs now. So much for bicycles. So that's how amazing the Chinese economy has evolved. Some people think, say it's communist, but talking about that, Clive, there's a big discussion here in the UK now about the inheritance tax because they haven't lifted the threshold since 2009. So if your house is worth £1 million pounds and you die, your family is going to have to pay 40% on about 675,000. And a lot of houses in London they've gone up a lot since 2009. So yeah, there's a lot of discussion about that. And I saw an article about an English guy who went to China in the 70s to finish his PhD, and he stayed there, got married, and he did really well. He's got a property in London, in Spain, in China, but he says he doesn't want to come back because if he does, he's in his 70s and he doesn't want to pay the inheritance tax. And he says, well, here in China, it's communist, but they don't have inheritance tax. So I think maybe you're in the same boat. You don't want to, because in Switzerland, there's no inheritance tax, right?
Well, there is, but it depends who you leave your money to. If it's your family, it's not very high at all, a couple of percent. I have a tip for your UK viewers on inheritance tax, which not many people know about. There is, in addition to your nil rate band, a property allowance for both spouses. So even if your spouse or your former spouse died decades ago, you can still use that property allowance. So I think that works out at £125,000. I may have got the figure slightly wrong, or maybe it's £175,000 per person. So for a couple, that adds 350 to your nil rate band.
Oh, I see.
And if the first spouse died without using the inheritance band because she left everything to her husband or he left it to his wife, you could use up their nil rate band adjusted for the number of years which have passed. So that can take you to quite a high number.
I see. What if, like, let's say my wife and I died and my daughter inherited our estate? Could she add that? So she would add 350 to the 325?
Yes. Yep. So that's taking up to 675.
Oh, I see.
Yeah. So it's a lot higher than many people realize, but a lot of people fail to claim it. And if you want to claim it from HMRC, it gets very, very complicated because now they ask for some very complicated forms to be filled in. It's not like in the old days when you did your death duty report and there was one piece of paper. Now you have a bit of paper for literally everything, and it gets very complicated.
Yeah, and if you probably have to do it online, or you have to call them and they will put you on hold for an hour. Is there a time limit for claiming this? No.
It's even if the first partner died 10 years ago, if that first partner failed to use the housing allowance or failed to use the nil rate band, you can get both of them.
Oh, I see. Does it have to be a spouse, or what if
Yeah.
I see. What about, okay.
And the house has got to pass to your descendant, i.e. to your
I
daughter
see.
or her children.
Oh, I see. Someone asked about Rafi. I don't know what's happened. He said he was coming on, but he hasn't shown up. So I don't know what's happened. Maybe he forgot, or he got some problems with the kids. Matthew Wilsey, reference BIS. I looked at their page of members. Does it mean anything that most large nations are members, including China? Will China be 100% free from the BIS? Have you got any idea on that, on the Bank for International Settlements? And
Well, I don't think China's part of the BIS as far as I know, but if we have a reset, I think the nations, or we have a new Bretton Woods type contract conference of that style, China's going to be part of it for sure. So whatever the new bank might be to replace the BIS in the future, if we have a reset, China will be part of that. But
yeah,
I don't see them, as far as I know, they're not part of the BIS.
all right. I thought, yeah, it's an interesting institution. It was created by international treaty in 1930. And I think the Fed wasn't involved, but it was JP Morgan, First National City Bank, and also the central banks in Europe. And some people think that it's going to be the central bank of the world if central banks stay around, because I think central banks have made a huge mistake, with this zero rate policy that we've had since 2008 and 9. And talking about interest rates, I think some of you have asked about what I think the Fed's going to do on the 14th. I think, is that a Wednesday? Yeah. Well, it seems like all the expectations from the economists on Wall Street is that they're going to keep rates unchanged. What's your view on that?
Well, we have the inflation numbers the day before on the 13th.
The CPI.
So I think they're going to take a look at those numbers, and if, as expected, inflation is going down in the United States, they'll say, job done, we don't raise rates. But, we might have a surprise.
Yeah, you never know. Chris Conman, thank you for your super chat. Says, if the Fed pauses this coming week, do you think the US dollar will start its bear market downturn and commodity prices will rise? I'll let you answer that first.
Okay. Well, first of all, I can say a little bit early, because I think the expectations will be they'll still raise rates if they pause in June. People think they will raise in July. The current consensus is that will be the last raise. I think that probably will be true. I think they will probably start going backwards, but I would say wait for July or August to see commodity prices really soar, going up a lot.
Yeah,
and then the dollar going down.
Yeah, and the dollar going down would be more pronounced against commodities and gold and silver. It might go down against the other fiat currencies, but in the end of the day, I think all fiat currencies are going down versus real things. Oh, just wanted to show you, Clive, because the Fed's balance sheet, we know that the Fed's balance sheet, they ramped it up back in March when the banks were, and then they've been it's been going back down. But I noticed that in the last week, it actually went up slightly by about 4 billion. But we are 83.89, and if we go back, we're basically back to where we were in the middle of February. So there hasn't been any quantitative tightening since the middle of February. And I wonder if this is going to start going back up. I mean, let's look at this. You see, every time they tried it here to go down and they couldn't, they kept going up. They tried it here, and then they tried it here. It just looks like the trend seems to be higher. What do you think?
Well, if I look at the CBO's budget, they do have a line for the Treasury debt held by the Federal Reserve, and that is forecast to go down for the next year or two, and then it starts to ramp up to all-time records. It's not a huge increase at the Federal Reserve level compared with the increase by the public at large, but they are assuming that the Federal Reserve's balance sheet will be bigger than it is today a few years out, but a year or two out, they're assuming it's going to be smaller.
I see. I see.
I'm just going to try and bring it up on my screen.
Okay, let me allow you to share it because I haven't.
Well, it might take a minute to just to.
Yeah,
to
no,
get,
because
get
I hadn't like
Okay, but I can find it.
Yeah.
Flicking through the pages. Oh, that's not the one I wanted. I'm on the. And yeah, budget pictures. Oh, yes, here we are.
BlackRock, joint account, is BlackRock too big to bust? Well, the thing about BlackRock is that they hold it's not really their money, is it? It's just like a mutual fund. And for some reason, they hold a lot of all the pension funds. They invest through BlackRock. But I think they've been, oh, Rafi's coming. Okay.
I'm going to try and share my screen. Is it that one? I think so.
Hi, Rafi.
Hello.
How are you?
I'm good. I'm good. What did I miss?
It's all right. Better late than never.
Mary, I was wondering if you see my screen now.
Yeah, we can. We're looking at
where you see the mouse. It says I'm looking for it now. Debt held by the Federal Reserve.
Yeah.
Currently, in 2022, it's 5.6. That's Treasury debt held by the Federal 5.6 trillion. So that doesn't include mortgage-backed securities or anything.
Yeah.
And they see that dropping down to, this is the Confederal Budget Office. Congressional Budget Office. They see it dropping to 3.9 trillion, and then rising again by 2032 to 7.1 trillion, a higher number than today. But compared with the increase for the debt held by the public, that's a relatively small increase. If you look 2 lines up at where my mouse is now, the debt held by the public is going to go, according to them, from 22 trillion to 44 trillion. So basically that's doubling in 10 years, which is a tough task. But if you read the small print about how the Congressional Budget Office has put its figures together, they say that by law, actually, I just see if I can bring up, stop share. I'll bring up another screen here. I'm just going to bring up another screen if I can, Mario, which tells you that how they're doing it. I'm struggling with this.
Are they reading tarot cards or something?
There we are. Yeah, there we are. I'll make that a bit smaller because you won't be able to see it.
The Congressional Budget Office. So what's this one?
If you look at it highlighted in yellow, it says the CBO must also incorporate the assumption that payments from trust funds would be made even after a fund's balance was exhausted and annual dedicated revenues were inadequate to fund them. And if you read a little bit further, you'll find that they say the trust fund for the Social Security is going to be completely exhausted in 2030, and that's consuming around $500 billion a year. But they basically are having to assume that the contributions from that fund to paying Social Security will continue, i.e., meaning that the budget is understated. And then they do a number of alternatives. They say most of the alternatives to what the official law says we've got to do would increase the projected deficits. So
Yeah.
things are going to be worse. Things are
Yeah.
going to be worse according to the CBO themselves.
Yeah. What I think, during that event in
Oh,
2020,
hello, Rafi. Sorry, I didn't see Rafi.
Hi.
during that event in 2020 to 2022, it was the opposite. The sign, the models were all predicting like a doom, and that didn't happen. I think the CBO modeling is like the other way around. It predicts everything, being perfect. What do you think, Rafi?
I think we should ask Neil Ferguson. He knows how to model things perfectly.
Yeah, he would be a good modeler for the CBO. I think the dollar would collapse the next day if he was allowed to model for all the debt.
Well, have they ever been right? Like, it's like rating agencies. Like, have they ever been right about anything?
I can answer that one, Rafi. I did a study of what the Congressional Budget Office was saying back in 2012. They had a long-term forecast out to 2023, and their forecast was for the national debt to be a mere fraction of what it actually turned out to be. And every year they changed their forecast once or twice a year, moving up the forecast of what the national debt would be in 2023, up and up and up and up. In the end, it ended up 60% higher than their original forecast. And needless to say, the tax receipts weren't as high as they had forecast. The difference was about 0.5% per year less than expected. So cumulatively 6% over a decade. And their expenditure was higher than had been budgeted, about 1% a year cumulatively. So about 12% over 10 years, very roughly higher. That meant that the deficit that they were making was something like 450% higher than they'd been in 2023 than they had been forecasting in 2012. What does that mean? It means that the forecast they've got for the next 10 years is going to be a lot worse than they say. And what they're predicting at the moment is that the debt held by the public will effectively double over a decade. I personally think it's going to be a lot worse than that. They're talking about going to 44 trillion. I think, according to my own maths, it's going to go to 70-something trillion in a decade.
Yeah, I think that's why they have to have a Pride Month. They have to distract everyone with a lot of BS.
Yeah. Do you really think it's going to last another decade? They're going to get to 70 trillion? I don't. I guess if the system limps along for that long, I'd be shocked.
I don't seriously think it'll be around in the way it is today. I think we'll have had a reset or a default or hyperinflation or something will have solved it, but it cannot continue in the way it is forecast.
Yeah, that's for damn sure.
That's just a mathematical impossibility.
We were speaking earlier about how the Chinese are buying a lot of silver for industrial use. And some people are speculating that even, what's his name, Elon Musk was in China a few weeks ago, and that a lot of silver was pulled out of the Shanghai exchange, and that they sold like 300,000 electric cars in the first 3 months of the year. Just wondering if you're seeing something going on Comex as well.
I'm not seeing anything specific going on in Comex, but it's the same trend since Silver Squeeze. We keep going down. Like the trend line is intact, down from 152 million to what is it, 27 million now, and I think the all-time low is 22 million of registered ounces. And look, this might not be anything. I mean, we've gone up and down in Comex before, but at some point it's going to be empty because it has to be. We just don't know if this is the final rundown.
Yeah, and we were looking at, there's a guy, Chinese guy on Twitter, and he put something out about the Shanghai Futures Exchange that you have to prove that you're actually dealing in physical silver to trade in there. So it's much more of a physical market. So I think Comex will be overwhelmed unless prices start going up.
Yeah, I mean, it depends who has the eligible, because the eligible is still pretty high. meaning all the silver that's in storage there. So I'd have to take a quick look at who has the biggest
Well,
eligible stocks. And I know JP Morgan has a lot, but a lot of it is stuck in SLV, so it's not them.
yeah, eligible, I guess that's silver throughout anywhere in the world, isn't it? Registered is the one that, but I guess they can move it very quickly. And I think they do that, but when you have the Chinese actually, because I think a lot of times they move it eligible to registered, and then they do EFPs in London, and EFP is not even physical, it's just paper shuffling. But I think the Chinese really want the physical thing, because they're using it for 70% of it for industry. So anyway, Rafi, just wanted to ask you, you spoke about, I think in one of your videos, you explained quite well how this system just, this fiat system and the Fed, where when the money supply goes down, what happens to it, and why they can't stop, they can't stop the QE and increasing the money supply, because if they do, everything is going to collapse.
Well, yeah, I mean, it comes down to just the basic logical point that we're in a system where the snake is eating its own tail. I mean, that's essentially, if the dollar is backed by debt because the Fed owns debt, I mean, by definition, just a dry definition of what is a dollar backing? A dollar backing is whatever's on the Fed's balance sheet. It doesn't matter what it is. That is the other side of the dollar. So that backs the dollar. It's the back of it. So the back end, if the Fed owns debt, so the dollar is backed by dollar denominated debt, and that's just a circle that eats itself, because you pay back the debt, the dollar no longer exists. So like if the Fed really wants to take deflation to the end, right? How could we take deflation to the ultimate deflationary finish? Is that all of the debt that is owed to the Fed is paid back to the Fed. The Fed takes all those dollars and they no longer exist, and we're back to $35 an ounce of gold. That means the destruction of the entire price system that has taken place since 1934, 33. So that's not the Great Depression. That's something else. But even in that world where gold goes back to 35, it's still all the purchasing power gets concentrated into gold at 35.
Oh yeah.
Yeah.
And everything else is destroyed.
Yeah, pretty much.
What do you think, Clive?
I think they'd rather have a reset and start with a new currency, keeping the old one so it's not a default, and they'll run the economy on the new currency and say you'll be able to convert your old money, your old dollars into new dollars in the future, but we're in the middle of a crisis, so you can't do it at the moment. And you'll never get to the point where you're allowed to convert your old dollars to the new dollars, which will be probably the CBDC, I'm guessing here, but I don't know. And I think that's the way they're going to run the reset. And technically that won't be a default, because you'll have a promise that you can spend your old dollars, or maybe you still will be able to, but only on certain things.
Yeah.
You probably won't be able to buy food with the old dollars. You probably have to convert it to CBDC if you want to buy food. So there might be a lot of restrictions on how you can spend your old dollars, basically meaning the national debt gradually or quickly becomes a defunct currency.
Well, if what Rafi says happens, I think the world, the world is pretty crazy right now, but it would become quite. I mean, I think they would go literally with pitchforks to the Federal Reserve Marionette Eccles building, because that would mean every business in the world would collapse.
Yeah, I don't think that's actually going to happen. I'm not saying that we're going to go back to 35.
You're trying to explain,
but there's no real difference between that and, let's say, we go to 35,000 and then they lop off 3 zeros. I mean, there's no difference. It's just nomenclature, but the effect is the same. So like what I described as the ultimate deflation is the same effect as hyperinflation to zero. Yeah. And you end up with the same thing again.
Yeah, I did a video like a week or two ago about that, because I was reading Rothbard, and he talks about how the money supply really is cash, right? The promissory notes to pay gold, and also deposits, because so if you take a M1 and you do the calculations for 100% gold, or actually 60% backing, you get to like 42,000. And then I thought, well, if you lop out three zeros, you get $42, and that's actually the statutory price of gold for the U.S. Treasury. And why 60%? Well, because in 1980, when gold went to almost 900, I took the M1. That was like 60% of the money supply. So it's possible. So we got a super chat from Michael. Thank you, Michael. He said he's asking the question, U.S. has no debt limit. I see massive printing of fiat currency. I'll let you answer first, Rafi, and then Clive.
No debt limit. Well, yeah. I mean, if Congress is going to be raising debt, that means they have to get the dollars from somewhere. If they're not going to get them from the Fed, they're going to get them from either deposits or somewhere outside the bank system in reverse repos. It's one of those two places. That's the only places where dollars exist. You could say it's foreigners, but they're not gonna buy this. I don't see foreigners doing this. So it's either existing deposits or it's reverse repos. It's one of the two. And eventually there's going to be enough of a squeeze that something's going to happen. Some bank's going to collapse or some other thing's going to collapse. And then the Fed will go back to providing the rest of the dollars that aren't there anymore. And then we'll be back on the curve. I think that should be it. I'm hoping that'll be it, because I don't know how much more insanity this world can take without completely destabilizing all of civilization.
So what's happened is that the debt limit has been suspended. So temporarily, for the next year and a half at least, there will be no debt limit, which means that it's, as far as the Treasury is concerned, is a free-for-all. They will fill their boots with as much debt as they possibly can. In other words, they'll borrow everything they possibly can, because if and when, and I assume that they will do this in January 2025, they reintroduce a debt limit. That new debt limit will be at whatever higher level of debt they've reached. Now, given the debacle we just had with everything going up to the very, very last minute, Janet Yellen would be a fool not to fill her boots before they get to that debate in January 2025. So I think they're going to borrow an awful lot, as much as they possibly can, in the coming year and a half, to make sure they have a huge war chest in case the arguments about the new debt ceiling go on for a long time when they restart the arguments into 2025. But right now we have no debt ceiling at all, and they can borrow as much as they possibly want. And as Rafi said, there are only two places they can get the money from. One is the Federal Reserve. If they get it from the Federal Reserve, that means that the interest rates could be massaged much lower by the Federal Reserve, but it will be extremely inflationary, because the money will be coming into the system, because the Federal Reserve will have to print it to give it to the government to spend. So that will be inflationary if the Federal Reserve buys the debt. The other place they can get the money that they can borrow from is the public at large, which includes you, me, your pension fund, the government of China, and anybody else who's minded to invest in dollars, such as mutual funds and so forth. In my opinion, we get to get the public to buy debt, they're going to have a higher interest rate, particularly since the target, according to the official numbers, is for the public at large to double their debt holdings over the next decade. So I think that we'd have to have higher interest rates to persuade the public at large to buy it, and that's obviously recessionary.
Yeah, and the CBO is projecting long-term rates to be at 3.9, isn't it? Which is pretty. I don't think it's very realistic, personally.
Yeah, I think if you look at the for the next 10 years, it's lower than that, I believe, Mario.
Oh, is it?
Yeah, I've got it in front of me now, actually. It says for 2023, Their forecast, this is the year ending in September 2023, they're forecasting a rate of 2.7% being the average interest rate on the debt held by the public. That's the treasury debt, that the money they're paying.
2023.
20, for this year. So 2.7%. Obviously, that's much lower than the 2-year rate and much lower than the 5-year rate or the 10-year rate.
I guess that includes that has been issued at lower rates. That's why it's.
Yeah, it does. Then the rate kind of creeps up to 2.8% by 2026, and by 2029 they're at 2.9%, and then by the time we get to 2033, they're forecasting a rate of 3.2%. I can tell you frankly, if the dollar survives that long, and if they borrow even double what which is what they're proposing, the size of the debt held by the public, it's not going to be at 3.2%. People will not buy treasuries at that kind of rate.
I want to ask you guys, because I saw a comment here about the Eurodollar system, and it's not really a system in my view. And there's a lot of people on the on YouTube on the alternative to talk about Eurodollar as if it was something like mysterious. And to me, it's just US dollars that are traded outside the US that are kept in international banks. Yeah, like let's say Barclays has $1 billion in London. They keep it at a US bank and in London, but ultimately those dollars they came abroad back in the 50s and 60s because of the Bretton Woods and the Marshall Plan. So they are included, in my opinion, in the monetary statistics in the US. So maybe you guys could give your opinion on that. It will start with Clive on this one.
So yes and no. We mustn't forget that Eurodollar is to a large extent a dollar created out of thin air by the banks through the fractional reserve system. So let's say a European company wants to borrow some dollars because it's going to do business in America. It would borrow on the Eurodollar market, raise 100 million or whatever it's going to raise. But that money will have been lent to it by a bank who, through the fractional reserve system, because don't forget, as soon as it borrows that 100 million, it's going to deposit it in another bank and it's going to find its way back to the original bank. So the banks, probably only 1/10 of it represents real money and real liability to the United States when it's all said and done.
I see. And is it issued, let's say if it's a French bank that issues the Eurodollar bond for a French company, are any of the American banks involved? Do they have to be involved? Because I don't think French banks can create dollars out of thin air. It has to be American banks outside the US, right?
For sure, the French bank will hold dollars, which it will have received either from US banks or foreign investors who've deposited those dollars. Yeah. So as money is borrowed from the French bank, someone gets those dollars and someone redeposits them back in the French bank, and then it lends them out a second time, and then someone redeposits them back in the bank, and it goes round and round in a circle until it's exhausted. So each time they're probably lending out 90% of what they get in. So your every $10 probably turns into $20 or $30 at the end of the day.
So does that mean that the M1 and M2 that we see on the Fed's website would be a lot higher? Does that include Eurodollar deposits abroad?
I'm not enough expert, but I thought M1 basically was money in circulation, which wouldn't include the bonds, I don't think. M2, I don't think so either. M3 maybe.
Yeah, but like when they issue the bonds, they get the cash, don't they? So or the deposit. Yeah.
So it could be. Yeah, bank deposits would be included. So, but I don't know if they include French bank deposits or not. I've no idea.
Have you got any views on that?
Well, I'm checking.
Yeah.
I'm checking Fred for Eurodollar deposits to see if they've got any. They only have 3 charts here, and they're all discontinued. So, nothing there.
Yeah, I think what would happen here, the French bank would issue the bond for, a French company. They would get the $100 million, and they'd probably deposit it with the French bank. But the French bank probably deposit it with an American bank. That's how it works. Because when I use, for example, my brokerage account in the UK, a UK brokerage, when I send, no, actually, it's another an American brokerage in London. When I send money to them, they send it to the US. So
Yeah.
I think it's all accounted for.
That's how the dollar system works. When you move
Yeah.
dollars from English Bank A to English Bank B, it passes through New York.
Yeah, that's right. So that's why I think all those people who talk about the Eurodollar, they don't realize that it does pass through New York, and the New York Fed is the bank that it passes through. So we got a super chat from Steve W. What is Rafi's opinion on the EFP market? How much physical does he think is exchanged on a percentage basis versus washing out paper silver contracts? So I'll let Rafi answer that, and then I'll answer too, because I used to see a lot of that going on in where I worked.
Well, as far as I understand it, and I might be misunderstanding it, but the exchange for physical is just a simultaneous swap of a futures position for a cash position. It has nothing to do with any physical metals being exchanged anywhere.
You're right. You're right.
Right?
Yeah,
That's all it is.
and the EFP is done, let's say, from Comex to the LBMA in London, and I can tell you that the EFP. I remember I used to see where I worked at MF Global or Men Financial. I used to see a lot of people doing these EFPs, but if I asked my boss, "Oh, can we take delivery of silver?" he would say, "No way." The brokers discourage delivery of silver, like the plague. And you know that, Rafi, don't you? Because you tried to take delivery, and it was a nightmare.
Yeah, I did. Didn't work.
That's right. Let's see if we got more questions. We got about 10 minutes to go. Rafi, is that gray in your beard? I see. I don't think
Oh
so.
yeah, it is. Yeah. No,
Okay.
this is my COVID stress patch.
All right. Okay.
Yeah.
Let's see if there's any more questions. Let's see, what can we cover here? Let's see. I've got a few. Oh yeah, I saw something here you guys might have an opinion on. It's to do with commercial real estate. I saw this story here that Twitter hasn't paid rent, and basically it's screwed up Goldman Sachs investments.
Isn't that legal in San Francisco? In San Francisco, you don't have to pay rent. You can also shoplift, right?
Yeah, I know. So why not? Yeah, that's a, so, but no, all joking aside, I just wanted to segue into the commercial property, because I think you were talking, Rafi, about the Fed's balance sheet as well. It doesn't just have the treasuries that Clive was showing. It's got a lot of mortgage-backed securities, and which are even more unsafe than treasuries.
So I think that mortgage-backed securities make up about 30% of the dollar's backing. And the point that I'm trying to make is that if housing, like in 2008, that wasn't the case. They didn't own any mortgage-backed securities. Nobody even knew what a mortgage-backed security was until 2009. Then everybody knew what it was. So now the Fed owns a whole bunch of these things, so that it has to be that when these things start defaulting, meaning and housing prices go down because of that, then the purchasing power of the dollar is going to go down even faster, which is weird because you would have falling housing prices. So how could the purchasing power of the dollar possibly fall if you have falling housing prices? That means the purchasing power is increasing. But yeah, maybe in terms of housing specifically, yes, but in terms of consumer goods that are much more immediately needed, prices would go up even faster. That's how I see it happening.
So I'm going to show you guys who is to blame for mortgage-backed securities. Louis Ranieri. He's the guy. He was a bond trader in the 70s who created the mortgage-backed security.
He was at the beginning of that movie, The Big Short.
Yeah, Louis.
Right.
So yeah, we can blame Louis Ranieri for the mortgage-backed security. Clive, what's your take on the not just the mortgage-backed, more real estate mortgages and also commercial property?
Well, first of all, let's start with the mortgage-backed securities. That's a pretty bad deal for the Fed, who owns a whole ton of them. It's 3 or 4 trillion of them. The reason it's a bad deal is because they are at fixed interest rates and for very long term. Now, when interest rates rise, it means the Fed is owning something, paying maybe 2 or 3% when rates are 5%, and it could be doing a lot better with its money. So the value of those mortgage-backed securities, not only for the Fed, but for anyone who owns them, will be going down in value. And at the same time, we have a situation where house prices risk going down due to the higher short-term rates, which means that anyone who comes into the market now to buy a house will have to take out a mortgage, not at the rates that the last holder of the house had with his when he borrowed the money, but he's going to have to borrow money at a new higher rate, meaning he can't afford to pay quite as much for the house. So there is a risk, and I don't want to say it's a huge risk, but there is a risk that house prices could fall. And if house prices fall, the risk of default on those mortgage-backed securities goes up. So I think whilst the Fed is already in a very deep hole due to the fall in the value of its treasuries, it's also in a deep hole because of the fall in the value of the mortgage-backed securities, and it is holding an asset which has a much higher default risk than the default risk on treasuries. So that's my comment on mortgage-backed securities. As far as commercial real estate is concerned, the real problem is that many investors in commercial real estate borrowed long, so for 5 or 10 years from their bank to buy the commercial real estate, and they would rent their real estate out at a higher rental income that they're paying in mortgage interest. And with the leverage effect, if they were expecting to get a normalized return on a rented building of 3 or 4%, by leveraging it, they were getting 5 or 6 or 7%. And that was all well and good because the interest rate on the loan was fixed and the rent was upwards only or fixed. But now we're getting into a very awkward situation for landlords, because when their loan matures, they're going to have to be paying a higher rent. And in many cases, the occupiers of their properties, the tenants, are going to be saying, I don't need 3 floors anymore. I only need 1 floor or 2 floors. Therefore, I don't want as many floors. So you're going to have a vacancy, or worse, I'm going to pay less rent on what I'm only willing to pay less rent because there's so much free real estate, I can go somewhere else. So the landlord might see a higher interest rate when his loan rolls over, and when his lease matures, which is typically 10 years, or 10 years, there could be 5 years or 20 years, but when his lease matures, which will be happening all the time for some landlords, they'll be seeing in the new environment of people saying, we don't want to rent as much property. So the property price, the rent's gone down, the interest has gone up, it's no longer profitable, and the landlord might be going backwards in terms of profits, which means he's going to want to sell the property, or he might not have a choice and may have to just default on the loan. So if those properties come on the market, the next buyer is not going to pay the old price, otherwise he's in the same situation as the current landlord. The next buyer is going to want to pay a lot less. Otherwise, the deal doesn't work. So I personally think that certain types of commercial real estate should be half price at least, and I'm talking about mainly office blocks. But that will have a knock. It's not just office blocks. There will be a knock-on effect across the whole commercial real estate sector. So I think that real estate in general, commercial real estate, is worth less than it was 10 years ago, and I think the direction of travel is downwards.
So do you think it would make any difference if the Fed started buying these mortgage-backed securities? If, let's say, they're trading at 60 to par, if the Fed went and said, we're going to buy them at par, would that make any difference? I think people would still be defaulting, though, because if they don't have the people to rent.
I think if the Fed was willing to buy those mortgages at par, the banks would be lining up to sell them.
Yeah, yeah. Rafi,
yes.
there's a question here. Maybe, I don't know if you have an opinion on it. And I spoke about this last week, I think, about Libor. Could you shed some light on the effect of the Libor switch? I think it's going to have, Libor is supposed to be phased out for good by the end of June.
Well, so Libor is an actual, sorry, not Libor, but SOFR. It's changing from Libor to SOFR. So SOFR is an actual market where wholesale funding is being traded in exchange for treasury, backing the collateralizing the loans. So this is an actual market that happens, and it was like 1.2 trillion dollars traded every day. Whereas Libor was just a bunch of banks writing notes on a piece of paper, or writing something on a piece of paper and handing it in. Like that was really the basis of all of global finance. Like, just gonna write on post a note and hand it into the guy. And like, okay,
they use that reference rate though for loads of loans, mortgages, and derivatives. Clive.
So yes.
So
wait, what I was gonna say is that if something like the repocalypse happens again, and suddenly the SOFR rate rises to 10%, and all of loans are based on SOFR and not Libor, you got a serious problem.
Yeah, I think so. Libor though used to be an unsecured loan. That's why the rates spiked, because the banks didn't trust each other. But SOFR is collateralized, so I'm not sure the rates there would spike. Clive, have you got a view on Libor and maybe what happened?
The one phrase which sticks in my mind and will forever stick in my mind goes like this: the Bollingers on me. And that's a line from the court case when some traders in Libor, or rather some of the UK banks were accused of fixing Libor, and the evidence that they had that the deal had been fixed to suit the bank and not the marketplace was the one trader had written to the other one, the Bollingers on me, Bollinger being champagne. So he was obviously buying champagne for the other trader for fixing the Libor rate at a fake rate. So that I think is what was unsatisfactory, that it was a fixed rate fixed by the banks, and now it's a free market rate.
Yeah, and I'll give my 2 cents. What Clive was talking about was back during the financial crisis, when Libor also spiked to it was like a repo apocalypse, and the Bank of England actually encouraged the banks to lie about the rate, and it's even on tape. And the BBC even had a program about it back in 2017. But someone's asking here about the U.S. Mint, and I saw someone tweet this out, but it didn't have a story or a link that the U.S. Mint is going to buy $10 billion worth of gold from BMO Bank. I saw that story, but the guy he just typed that on Twitter with no link or anything, and it says they're going to do it till 2040. And apparently they did the same thing with another bullion dealer back in June of 2020. They said they're going to buy 10 billion by 2040, and they bought it way before. Like 2040 is just a date that they put, and the reason this guy tweeted this out is that back, from when the U.S. Mint announced that, apparently in 2020, which I didn't see, gold went from 1,500 to 2,000. So I don't know if I haven't seen the story on that.
No, I've not seen the story either.
Yeah.
I saw one of your guys just typed a comment about the wheelbarrow story in Germany, when they had hyperinflation and people were pushing their money around in wheelbarrows. And the anecdote goes that one of the guys had his money in the wheelbarrow. He went into the shop to buy a loaf of bread, leaving the money outside in the wheelbarrow. Someone tipped all the money out and stole the wheelbarrow.
Yeah. Yeah, it's worth more. Stephen W. So if the EFP is not physical settlement mechanism, where, for example, does the U.S. Mint take delivery of silver for Silver Eagle? well, I don't think the U.S. Mint trades futures, and they definitely wouldn't do EFP. So they would go to a bullion bank and take delivery. I think BMO Harris has they are a bullion bank. That's what they would do. Yeah. Anyway, so guys, I think it's time. It's getting late for you in Geneva, and definitely late in Israel, right,
Yeah.
Raf?
Yeah, it's midnight here.
Okay. Thank you for coming on, guys, and thank you for the viewers as well. And if you are new to the channel, make sure you subscribe. And Clive, thank you. Rafi, thank you.
Great.
Thank you, Mario. And thank you, Rafi. Nice to see you again.
Good to see you too, Clive. Okay. I'm gonna go to bed.
Yeah.